Morning, guys. A relatively calm market in most aspects in most places, as well compared to the last couple of sessions. We note that the commodity markets, as we can see here, are pretty much unchanged, but still quite weak, which would indicate that the global recession is still on track to happening, and therefore inflation should be dropping. This brought stocks back down to the lows, but again pretty much unchanged from the previous day, and a quiet session as it consolidates down here on the lows. I don't think this is a time to be thinking of this is the bottom of the market, but I wouldn't also don't think it's a good idea to sell down here. I think the market will come back and fill some of this imbalance up. You've got a bit of a double bottom there, but come and fill this imbalance up here, and then head off again if it can get up that high, that is. I still think we are looking in sort of well below 3,000 for the S&P 500. I've seen reports of closer to 2,000 by the end of this cycle. Yeah, I think it's still a seller's market, but you not at these levels. You need to wait for the market to give you a good area to fade from. Currencies were also pretty stable compared to previous sessions. US dollar was looking like a little bit weaker, but then bond market turned that around, and that's where most of the action overnight was in the bond market, and I'll bring that up in a second. But we're seeing US dollar effectively consolidating up here, pound having a relatively quiet session, hanging around that 107 handle, euro pretty much sideways, yen pretty much sideways, pushing up against that line in the sand by the BOJ at 145. I think fading the yen off that against a weaker currency is probably a good play. Kiwi is one of those weaker currencies. Commodity currencies are those weaker ones. If you can find an opportunity there, such as the CAD yen, Kiwi yen, Aussie yen, fading those or selling those on a technical basis should do okay. But the US dollar itself, this dollar index here, I don't see too much more upside. Last night it was looking a little weaker, but bounced a bit on bonds, and we'll go and have a look at those now. But I would prefer to be a buyer of US dollars, yes, fine, but at a more reasonable price than out here. So just want to finish on bonds. Bit of a crazy market, right? This is a weekly chart of the US 10-year. You can see it's been a 30-year bull buyer's market. So this is yield, right? As yield is inverse to the actual bond price. So it's been a 30-year bull market, and bottomed in during COVID era, and the last 10 years there's been a massive amount of liquidity into the bond market from quantitative easing. But this chart is starting to look hugely depressing in terms of where interest rates are going, and there's a massive move again overnight. 10 years up, we're looking to reverse, we're up, but what I want to show is the majors as well. So that's the US 10-year market, the Aussie 10-year market also looking very strong. Interest rates are going way up. If you're a homeowner, probably not the best looking chart. This is the German bonds, again, a 30-year bull market being turned around. Certainly technically this is all broken down, fundamentally it's all broken down as well. Then this one, the big one, that is a nasty looking chart. Haven't seen a move like that really, maybe during the late 80s, early 90s, when that recession, the recession of 91, 91 to 94. But yeah, that move, that is extraordinary. You can see that over just over a month, it's gone from 1.75 to 4.5, even touching 5% overnight. 4.5. Yeah, that's a pretty crazy move by anyone's technical view of the market. It's, more of that to come, and that's what we're seeing is why the US dollar caught a bid last night with that massive move in the bond market. So be patient. You'll get opportunities to get on these trends. You just got to time it well. All right, I'll see you next time. Thanks, guys.